Again, and welcome everyone. Jeff Jenkins and Eric Clayman here. This is the 22nd episode of our Facebook Live series, and as we've told you before, Eric and I are the partners at Jenkins and Clayman, one of New Jersey's premier bankruptcy firms. Today we're going to talk about really a lot of bankruptcy things. We're going to talk about bankruptcy and getting a car before, during, or after a bankruptcy, and which one's better and how that might work, and also getting a new mortgage, whether you're buying a house or refinancing or whatever, before, during, and after a bankruptcy. We're going to talk about credit scores, how to make your credit score better, and the best time in a bankruptcy context to do all these things.
That's right, Jeff. Jeff, we've been doing this, 30 years together or so, a little longer than that. And one...
well, they didn't have computers when we started, I don't think.
No, they didn't have Facebook Live. We would have been stars back then. You were much younger.
Yeah, I really was.
Jeff, as you know, one of the big concerns of clients when they call us at first is they're having financial issues of some kind, so serious that they decided to speak to a bankruptcy attorney. Mm-hmm. But one of their issues is, how will this affect my credit score? Will I be able to buy a car in the future? Will I be able to buy a house? I'm behind with my rent, but someday I'd like to buy a house. Mm-hmm. And it's typical that a bankruptcy client, there is no right age or right family style to be a bankruptcy client, but so many of our clients have 2 or 3 kids, mm-hmm. and with what's going on in school and jobs and careers, there's so much going on that the filing of a bankruptcy is like having a boiling hot cup of coffee or cup of tea, and you're told to drink it right away. And you call our office and we tell you, relax, put the coffee cup down, take a teaspoon, blow on it, and slow down. And that's really one of the huge advantages of filing bankruptcy. So when you call us, we take our time and go over this with you. So about your credit score. Look, bankruptcy is not good for your credit score, but if you're calling us, you have a serious financial issue, and that has to be addressed first. And then, once we stop the eviction or foreclosure or wage garnishment, the IRS or other collection action against you, keep your car from being repossessed, something serious like that, we're able to then help you with your credit score as well, mm-hmm. whether you file a Chapter 7 or Chapter 13, right, Jeff?
That's right. Well, I'm supposed to talk about this, aren't I?
You can. I know it too, so I can talk if you want.
All right. There's, at our firm, we do business with a third party who helps our clients with their credit score. And we pay them, we give their help to you for free. They're not charged for it at all. So this third party that we deal with will take time with you through emails and so forth and have you do the things that you need to do to have your credit score be better. Because as Eric indicated, of course, a lot of times our clients come in to see us to file a bankruptcy and their credit's not in good shape and they're concerned about it. And with this program that we would put you in, whether you do it, if you do a Chapter 7, when you're finished the Chapter 7, and that's going to take 4 to 6 months, even faster, 3 months faster, yeah. Maybe. And as soon as you're finished the Chapter 7, we give your name to our friend. He'll contact you, and he'll have you do things to get your credit score better, despite the bankruptcy and all the other stuff that you have had going on in your life. With a Chapter 13, we can actually do the same thing in the same amount of time, yes. The same time frame, maybe 3 or 4 months or so after we file the bankruptcy, because once your case is confirmed, it doesn't have to be over with, once it's confirmed, approved, your plan's approved by the court, our friend can start working with you to fix your credit report score, to get it up there. And his object is to get you around 720 in terms of a credit report score.
That's a good score, Jeff.
It is, and he does a very good job, and he's helped 65, 70,000 people with that kind of thing.
All of them are clients?
No, unfortunately.
Throughout the United States.
Yes, that's
but
right.
We're his vendor here, and
yeah,
he's really worked well with us. But Jeff started this our Facebook Live today by saying we really want to be specific now Okay, so you've called us, you're having financial difficulties. We slow things down for you, taking our time. You feel comfortable, we feel comfortable. You file the bankruptcy petition. But before you file bankruptcy petition, you tell us that you're really concerned about keeping your job because you don't have a reliable car.
Mm-hmm.
Jeff, that's a really open-ended question, isn't it? Because what do you do if you need a car loan and you're in financial difficulty?
Right. It's not easy.
So if you think about it, there's three answers to the question. A, two or three. One, you should finance a car before you file bankruptcy, whether that's with a cosigner or on your own.
Mm-hmm.
As long as you're purchasing the car, financing the car with the intent to pay for the car and keep it. There's nothing wrong about purchasing and financing a car that you're going to maintain the contractual payments while in bankruptcy. Number two, file bankruptcy first. Stop the collection actions, and because you have to.
Mm-hmm.
They're garnishing your wages. They're going to evict you. You're going to lose your house to a sheriff's sale. The IRS is after you. You have to file, but you still need a car. Can you get credit while in bankruptcy? Or number three, are you better off letting the bankruptcy case be filed, conclude, get your fresh start that Congress designed when it wrote the bankruptcy code, and then worry about getting a car loan?
Right.
And we've had clients do all three, right?
Exactly. Although, the type of bankruptcy that one of our clients does is going to dictate which one of those three choices they would tend to point themselves for. If their car is falling apart right now and they're going to be in a Chapter 13 for 5 years, I don't think they're going to be able to wait 5 years to get a car.
Right. Chapter 7, of course, as Jeff just said, can be 3. Jeff said 4 to 6 months. That's typically what it was. But bankruptcy filings in New Jersey have been reduced due to the pandemic.
Mm-hmm.
It seems like our clients are getting discharges in more like 3 or 4 months.
Faster, yeah.
Faster. So in light of that, in the Chapter 7, you may be better off just waiting, cleaning up your credit. Now,
Mm-hmm.
of course, just getting a car loan isn't enough. You want to get one that's affordable at the lowest interest rate, the lowest payments, be as fair as possible. It's been our experience that to get a decent interest rate on a car loan without a cosigner, after you do a Chapter 7, ideally it would be 1 year after discharge. 1 year after discharge, you can typically get a pretty decent car loan.
Yeah, you should be in really good shape.
Especially if you've used our vendor, your credit score's up.
Mm-hmm.
So if you can wait that long, wait that long. If you can't wait that long, having the discharge, you'll probably pay a higher interest rate, but your ability to repay that loan and keep the car has been enhanced because the bankruptcy has discharged or forgiven all the medical bills, the credit cards, and the other stuff that were causing you financial difficulty.
Mm-hmm.
Jeff, that's Chapter 7. Let's talk about our Chapter 13 payment plans. We've had clients with car loans right before, during, and after, I suppose, right?
Yes, absolutely. And a lot of times, if somebody really needs a car, their car's about to fall apart, we know we're going to file a bankruptcy, we might even suggest to our clients that they might be a little better served at that moment in time to get a car right before the bankruptcy is filed. It might be a little bit more difficult for them once they're in the bankruptcy to get a car, and mortgages would be a different story.
Yeah, we will talk about that in a moment. Now remember, you always have the option of having a cosigner on the car loan, and that can help you out quite a bit.
Mm-hmm.
If you know someone that with good credit who's willing to sign with you, that can keep the interest rate down. Again, there's nothing immoral or illegal about getting a car loan right before bankruptcy, as long as you are committed to maintaining the payments on the car loan.
Right.
Once you're in a Chapter 13, and remember, Chapter 13 are our payment plan bankruptcies that people use when they're behind with their mortgage, behind with their rent, owe the IRS a lot of money, or otherwise need an extension, a payment plan protected by a bankruptcy court. Those type bankruptcies last 36 to 60 months. If you need a car loan during that plan, you can typically get one once your case is confirmed. Both Chapter 13s that we deal with, trustees that we deal with, Albert Russo for the middle section of New Jersey and Isabel Balboa for the southern section of New Jersey, they have what they call no position letters. And most of the car dealers are familiar with them. So even after you're in bankruptcy, if you need a car loan, basically if you keep your car payment below $400 a month, although we just saw one higher than that.
4 to 5, I'd say.
Yeah.
I mean, each Chapter 13 trustee has their little standards. They don't want the interest rate to be above a certain amount.
18.
They don't want the monthly payment to be above a certain amount. 18% interest
Right.
is kind of their ceiling, and a payment of $400 to $500, no more than that.
Right, certainly. Absolutely.
And you're going through that because most car lenders will want you to. If they see that you're in Chapter 13, all I have to do is pull your credit report, and the bankruptcy is going to show up. They're going to want something from the trustee saying that it's okay for you to get that car loan almost every time. And like Eric said, that's what they're after, and what the trustee ends up generating is a no position letter. They take no position about you buying the car, which is really the same as saying it's fine, as far as we're concerned.
Right.
It's not so much I don't care, but
let's translate no
fine.
Position letter. I think we needed that. Thanks, Jeff.
Yeah.
No position is good. A position letter? They don't write position letters, do they?
No.
No position is good.
Not about car loans.
We better watch ourselves. We're on live Facebook.
Yeah.
So, third, Jeff, on these car loan situations. Remember, the Chapter 7 bankruptcies, you're in and out in 4 months. Chapter 13, 3 to 5 years.
Mm-hmm.
We talked about Chapter 7. Certainly, Chapter 13, if you complete your case and get a discharge, you've worked with our person, and your credit score should be higher after the first 6 months, let alone after 36 months. What about getting a car loan after Chapter 13?
Well, if you get your credit score up there, I don't even know that you need to wait. I mean, you're going to have a nice credit score, like Eric said, in the not too long after your case gets confirmed in a Chapter 13. So going ahead and getting a car loan at that time makes a lot of sense. You should get a decent interest rate. You're not going to be paying 18% or some silly thing like that. And why not do it with the bankruptcy going on? If your old car's falling apart, you need a new car, it would be logical and just fine for you to get that with Chapter 13 going on.
Right. All right. We also wanted to talk about other kind of credit that clients call us about all the time, and those are, of course, home mortgages.
Right.
At the beginning of this episode, when I first spoke, I talked about how before you file bankruptcy, you're drinking a hot cup of coffee, and the bankruptcy slows things down. One of the things that people are concerned about, they call us, they're in foreclosure, which is a frightening thing to be in. Your bank, your mortgage company wants to take your house.
Mm-hmm.
Jeff, there are many ways to save your house before you file bankruptcy. Once you file bankruptcy, you can try to refinance. You can talk to your mortgage company about a loan modification.
Mm-hmm.
You can sell your house. But if you're facing other financial difficulties, such as credit card debts, medical bills, and you want to save your house and the mortgage company isn't working with you, bankruptcy is something you should really consider.
Absolutely. Yep.
And let's keep talking about that, Jeff. So a client calls us, and I'm going to give you a hypothetical, okay? They tell you that they're in foreclosure. They've tried a loan modification, and it hasn't been accepted,
Mm-hmm.
and now they're afraid they're going to lose a house. Is there a benefit to filing bankruptcy at that point?
Well, there is, as far as doing something with a mortgage company, but it's more like they've got all these other issues. Creditors are calling them, maybe threatening to garnish their wages or take money out of their checking account, and they've got a foreclosure going on. All this stuff we have to stop, and we stop it by filing a bankruptcy. Now everything's under control. Nothing bad's going to happen to them. We can take our time dealing with things like getting a mortgage. And it's been our experience that with mortgage loan modifications, the lenders are a lot more apt to give you one after you file a Chapter 13, when you're in the Chapter 13, as opposed to before the Chapter 13. And why that is, I don't know. I think perhaps because the mortgage company really doesn't want to fiddle around with a bankruptcy. You're in bankruptcy. If they can just give you a loan modification, now they don't have to worry about the rest of the stuff, about the bankruptcy going on and paying attorneys to monitor what you're doing and all this other kind of stuff. So our experience is that it's a lot easier for one of our clients to get a loan modification and reset their mortgage, get rid of the arrears.
Let's talk about that, Jeff. I'm interrupting you because how about let's define, because you helped me define a no position letter.
I did.
Why don't you talk about the difference between a loan modification and a loan refinance?
Okay.
That can be confusing.
Yeah. Well, with a loan modification, what the mortgage company is going to do is they're going to take everything that you owe, all the arrears, the principal, escrow that hasn't been paid, they're going to put it all together and they're going to create a new loan. And they're going to try to keep your payments the same by reducing the interest rate and or extending the term of the loan. So you end up with a brand new loan that incorporates all the stuff you were behind for about the same amount you were paying previously. And that's a loan modification. Refinancing, of course, is kind of starting from scratch and getting a whole new loan, whether it's from that mortgage company or another one. And those are certainly more difficult to get in a Chapter 13 than getting your loan modified by the mortgage company.
Right. And so Jeff was talking about why would a mortgage company want to do that after you file bankruptcy? Well, remember, and I'm just going to add on to what you said, Jeff, if before you filed bankruptcy you applied for a loan modification and you showed the mortgage company you had $20,000 worth of credit card debt and $20,000 worth of medical bills, they're going to be concerned. How can you juggle everything?
Right.
Once you file the Chapter 13, they know you don't have to worry about the credit cards or medical bills. You're singularly focused on saving your home. They like to see that. And that's why these loan modifications do work better after the Chapter 13 is filed.
And to be just a little bit more precise, perhaps, mortgage companies generally have little equations that they use. They don't want your monthly mortgage payment to be larger than a certain percentage of your gross income, a certain percentage of your income after you've made your normal monthly payments.
Right.
And like Eric said, if you're dealing with credit cards and medical bills that aren't paid, that's not doing that percentage well. But if we get rid of those things, you're in better shape than to satisfy their little percentages about getting or changing your loan.
And remember, again, it's the hot cup of coffee, the hot tea. And as Jeff explained it differently, but it's the same point. You have a moment to take a deep breath and to go through the loan modification process. There will not be a sheriff's sale while you're in bankruptcy without, not for several months. And it's extraordinary if there is a sheriff's sale. It would be with notice to you and notice to us, and we would fight for you. So don't worry about that right away. But you can come to see us with a sheriff's sale tomorrow, and we file bankruptcy today. It's stopped.
Mm-hmm.
And we have time to help you through the loan modification process or a regular Chapter 13 plan to save your house. And by that I mean you resume your regular monthly payments and pay the arrears over 5 years.
Right. It's just that a lot of times lately, with we see people with significant arrears on their mortgage. 20 years ago, we didn't see that very often. But after the mess that our country had in 2008 and 2009, so many mortgage defaults, we see these delinquencies that are substantial on mortgage loans. And for somebody to try to pay that off over 5 years through a Chapter 13 trustee and resume making their normal monthly mortgage payments might be impossible based on the numbers involved. Right. So that's why we might have a plan for them to continue their mortgage payments, but not pay for the arrears through the trustee, but pay for them by getting a modification. Yeah.
Right. Jeff, I can see we only have a couple minutes. I did want to talk about this. We've been doing this for 30 years. Do we have clients who buy homes after they file bankruptcy or even in the midst of a Chapter 13?
Yes.
Is it possible you can file bankruptcy as a tenant and leave bankruptcy as a homeowner?
Yes, absolutely. We've seen a significant number, let's put it that way, over the years, people get new mortgage loans while a bankruptcy is going on. In fact, there have been times, more than once, where I've actually, in the morning, gone to a real estate settlement with clients of ours to sell their house, and then in the afternoon gone to another real estate settlement for the same clients to purchase a new home. And that can happen. There's not an issue with that.
Right. It's and interest rates on a Chapter 13 client of ours for a mortgage. We might have scared some people with the car loan stuff has to be less than 18%, but it can be 12%. But the home mortgages are different. They're conventional interest rates on these
Yes,
mortgages.
they're very close to a normal interest rate. They're nothing like the car interest rate that we talked about.
Right. So basically, filing bankruptcy isn't great for your credit, but you're not talking to us because you have good credit to begin with. And we're trying to give you a path out by getting rid of your debt and by making you feel more comfortable that at the end of our program, at the end of the bankruptcy, you will have better credit, the ability to get a car, possibly the ability to get a mortgage, and an improved credit score.
Yeah, I'd say certainly the ability to get a mortgage. And since we're talking about car loans and mortgage loans before bankruptcy, during, and afterwards, afterwards is much easier than either of the other two choices. With bankruptcy over with, especially if you wait a year. If you wait a year, even if you haven't done something to work on your credit report's going to naturally become better because you will have gotten rid of all of the other debt that you had. But working with our friend to raise your credit score is really going to help. So, but a year after a bankruptcy, absolutely, whether you did a Chapter 7 or a Chapter 13, you can think about getting market rate mortgage loans.
Absolutely. And really, no one wants to come in and see us. We understand that. But there is a path out of.
Well, some people are happy to see us.
Some people are happy to see us. Yeah, the guy who charges us for the copier machine, he's happy to see it. All right. Well, Jeff, I think this has been helpful for people. And
yeah,
please give us some comments on the Facebook page.
Yeah, I hope it's been helpful. And so that concludes our Facebook Live episode for today. Have the same thing next week, Thursday at 2 p.m. So we'll look forward to seeing you then. And until then, goodbye and God bless.